Palo Alto just released their latest quarter earnings, and we're staying tuned for Nvidia's numbers about to come out. Let's go to Ivana Delevska. She's founder, CEO, Spear Invest, to take a look first at Palo Alto. Thanks for joining us today. I'm going to read out some of the information for the viewers here, and then we'll talk. Adjusted earnings per share, 93 cents versus $1.56 year over year. The estimate was 90 cents. Revenue coming in at $2.47 billion. So that's a 16% increase, Ivana. The estimate had been 2.46, so very close, but a beat there. And then it looks at product revenue was up 23%. Subscription and support revenue was up 14%. Second quarter forecast here sees revenue at $2.57 billion to $2.59 billion. And then the forecast for the next year, revenue at $10.5 billion to $10.54 billion. The estimate had been for 10.51, so in the range there. What's your first take on the Palo Alto numbers?
Well, thanks for having me, Marilla. The headline numbers look okay, but the outlook looks a little bit weak compared to expectations. Remember, for companies to keep the momentum here, they are expected to have pretty decent beats. The overall revenue growth reported for the quarter was strong, but the outlook is a little weak. I also see that they announced an acquisition here, and they are already going through a prior acquisition. So I think the market could be also a little bit concerned about them doing too many deals at this point in the cycle.
Okay, and Palo Alto, is that a good deal for them, you think? Is that an acquisition that'll work with them?
Well, I think that they had a previous acquisition that is supposed to be large and it's supposed to close in fiscal 26. And the new acquisition that they just announced is Chronosphere for $3.5 billion. We would need to look further into the details to see the strategic rationale for this deal. But that's really the concern here is, are they going to be able to integrate these deals and get synergies?
Okay, so the Nvidia numbers are just coming across into the newsroom. Let me give you a quick idea of what they are for third quarter. Revenue coming in at $57.01 billion, and that's a 62% year-over-year increase for revenue. The estimate had been $55.1 billion, so a very strong beat for Nvidia there. Gaming revenue coming in 30% up year-over-year. Let's get down to adjusted operating expenses coming in at 4.22. So that was exactly on the estimate for $4.22 billion. They're looking at fourth quarter forecast revenue coming in at $63.7 billion to $66.3 billion. And the estimate had been for 61.98. So a very big beat for fourth quarter forecast as well. These are strong numbers, Ivana, that clearly investors and analysts had been looking for. And again, we don't have the details yet as to sort of what else is clouding, if anything's clouding the horizon for the company. But what's your take so far?
So the guide is actually pretty strong, especially for investors coming in concerned into this report. Going into the report, we had a lot of people being very cautious on CapEx spend, financing needs. The liquidity market is tightening up a little bit with weak macro. So people are concerned about how they're going to be able to finance these deals. Clearly, these numbers show that companies are able to finance deals, and Nvidia keeps beating. The key will be on the call to look for any sort of color into next year. That's going to be really where they're going to have the transition come from the Blackwell to the Rubin platform. If that goes smoothly, we think there could be significant upside to next year's $300 billion revenue number. So that's really what we are focused on. But for the quarter, the numbers look pretty solid.
Okay, I do want to get to earnings per share, which came in at $1.30, and that beat the analyst consensus estimate of $1.25. So they're up there as well. You mentioned the Rubin platform and an adjustment that will be made there. I had someone talk about bottlenecks and the threat of bottlenecks slowing growth for a company like Nvidia. Is that something you worry about? And if you can expand on that, if you do?
Well, really, the key bottleneck, I think people are concerned about demand. We're not worried about demand at all. So the key bottleneck, in our opinion, is how quickly you're going to be able to put these GPUs into work, right? So power is a bottleneck, but even more than power generation itself, it's the physical data center availability. So you really need to have not only source power supply, but also the actual equipment and infrastructure that that you need for these GPUs on the ground. So this is why we think that there is going to be opportunities across the board, broadening out from just Nvidia here. So all of the companies that provide power components, networking components, that's where we're seeing most of the upside going into next year. Optical components is another area that's been recently gaining traction. So we disclose all of our holdings on our website, but I think the upside is really going to broaden out just from Nvidia, which was the prior generation Hopper platform, to a much broader set of companies.
As you know, there's been a lot of push down of tech stocks in the last couple of weeks. We're looking at Nvidia after hours trading here, and it's up over about 4% at this point, but it was gaining ground already ahead of the results being announced. Do you think this will turn the tide to bring investor confidence back to tech?
Well, we're going to look for further color on the call to see if this is enough to boost the sector. I think the fundamentals are very strong of the AI trade. I think macro concerns have been weighing a little bit on tech just because of the liquidity and the CapEx requirements, but we're not really concerned at all about fundamentals. We think even post macros, people should be using these opportunities to buy the dips in quality names that don't have credit issues and have plenty of free cash flow generation potential. So I think you need to be selective here in the macro, but I would say that it's important to keep buying the dips because the AI trade is in very early innings.
All right, Ivana Delevska, founder, CEO, Spear and Beth, thank you for joining us. Appreciate your time.